My name is Jelena. I'm the co-founder and CEO of Noble. So Noble is a purpose-built, dedicated issuance chain for the Cosmos ecosystem. And we're issuers of Circle's USDC, Ondo's USDY, Hashnote's USYC, with more stablecoins coming soon. 2024 was a really interesting year. Obviously, we had the meme coin mania and we had somewhat of a bull market, but I'm interested in seeing a lot more of the fundamental sort of DeFi products be reinvigorated. We're also very excited about stablecoins. That's obviously Noble's focus. So things like, new stablecoins coming to the market, ones that actually share yield with their users, ones that are kind of innovating fundamentally on the protocol level. So seeing a lot more of a kind of back to basics, focused on infrastructure, focused on stablecoins and DeFi, although I'm sure things like meme coins will continue to stick around. I think that a lot of people are really looking for more security and trust and reliability in the crypto ecosystem. Obviously, we have seen things like hacks continue to be a reality. And really the impact that we're looking to build with Noble alongside many of our partners is really reinforcing that trust in the technology and in these distributed systems. So with a kind of refocus on infrastructure and a refocus on kind of DeFi primitives, and of course, things like stablecoins, I think that will be able to kind of reinvigorate that trust within the community. With the approval of the spot ETFs and sort of institutions and regulators sort of understanding the power of things like the Ethereum network and the Ether currency, I think it'll bring a lot more kind of interest and enthusiasm for regulatory clarity elsewhere in the crypto ecosystem. One of those kind of spaces being the stablecoin space. So we already actually see this in Europe with MiCA. We see this in Japan. They have a lot more regulatory clarity around stablecoins in that market. And I'm pretty hopeful that we'll see a similar sort of kind of enthusiasm and regulatory clarity around stablecoins in the US and in Canada. Crypto payments are a very interesting topic because they've been around since Bitcoin was first invented. Obviously, the promise of Bitcoin was peer-to-peer digital money. And now with things like stablecoins and things like scalability and kind of efficiency on the kind of infrastructure level, you can actually see payments take off in a more fundamental way. So for Noble, we're really excited because our entire business is focused on the issuance of stablecoins, making sure that there are interoperability between distinct blockchain environments, that we have integrations with the correct custodians and wallets and off-ramps and on-ramps. And so we're actually now just seeing the plumbing of crypto payments take hold and actually be scalable on a very large level. So crypto payments, again, have been with us as a topic in cryptocurrencies since the very beginning. But really, it's only, 10 years later that we're actually seeing things like stablecoin payments, cross-border, Forex take off, which is really exciting. When we think about crypto payments, we should definitely think about stablecoins within the crypto payment landscape. And we definitely have not seen the same level of adoption in Canada just yet. There is no kind of dominant Canadian stablecoin. Fintechs have sort of yet to come around to the concept of, crypto payments. So I would definitely say Canada is not as ahead as, our neighbors to the south. In the US, we obviously have, a very, very large stablecoin market of US dollar stablecoins. And so I definitely think it's a big opportunity for the Canadian market to actually take advantage of a lot of that innovation. The way that I think about stablecoins is the same way that I think about Bitcoin or Ether or any other cryptocurrency. These are sort of building blocks and opportunities for people to participate in a very, distributed, decentralized network of many, many stakeholders. The cool thing about stablecoins is obviously you don't have the same kind of volatility and speculative risk. And so it becomes a very interesting building block for kind of more traditional applications. So in the future, you can imagine, a Venmo type application that is actually built on top of stablecoin infrastructure. You can imagine, a remittances platform or a payments platform built on top of stablecoin infrastructure. So in the same way that we have, DeFi products being built on top of the Ethereum network, we're going to have novel applications being built on top of stablecoin infrastructure and taking advantage of those properties. So one thing to note is stablecoins obviously are pegged to real world currencies. The most famous of these stablecoins being USDC, which tracks the value of the US dollar. But at the same time, though they track the value of the US dollar, you're still not needing to interact, with a financial intermediary, with a bank. And so they become these very interesting kind of building blocks for novel crypto applications that actually look like something that consumers are already very familiar with. We're definitely seeing a lot more interest from institutions in things like crypto ETFs. When it comes to demand for these assets, I like to think of it from the consumer level and what consumers care about that will drive demand and on the institutional side. So what do consumers care about today? They do care about, obviously, yield and actually reliable yield. So things like stablecoins and yield-bearing stablecoins or any real yield-bearing asset are things that institutions are now becoming more and more invested in. Obviously, we have things like BlackRock, asset managers like BlackRock launching funds like the BITL fund, which is actually a mechanism to have on-chain representation of these yield-bearing assets. And so really, you have sort of the cryptocurrency being represented in two ways. One is your kind of traditional, kind of safer, kind of predictable, kind of yield kind of audience that wants to invest in things like, tokenized treasury bills. Or on the other hand, you have, the highly speculative, highly kind of risk tolerant consumer or trader that, is interested in meme coins or, alternative layer one tokens. And so I do believe that on either side, those consumer demands will be satisfied. Although for now, you definitely see the institutions being more sort of responsive to the more kind of risk kind of tolerant side of the market when it comes to things like, tokenized treasury bills and real world assets as a broad category. Sometimes it might feel like we are at the tail end of a large, innovation boom, but I would argue we're actually really just the beginning of it. When you look under the hood, a lot of the plumbing, a lot of the kind of scalability concerns of blockchains, things like interoperability protocols, they're really just now taking off in a meaningful way. And so there's definitely been a lot of hype and a lot of demand for these assets, which is great to see. But we still have a lot of work to do on the infrastructure side to actually make these, technologies more scalable, to make them more attractive for consumers, and to inevitably instill more trust in these underlying technologies.